I took over the central bank, as you are aware, in July 1993. And in the previous year, in 1992, prior to the elections, up to the elections, it appears the government released a lot of money into the economy. So there was too much money in circulation. And when I was appointed in July, inflation was running at 80%. The value of the currency was falling very rapidly. And there was no foreign exchange. So when I arrived, challenge number one was the staff. There was a lot of indiscipline in the staff. Morale was very low. And obviously, because of those exchange control days and golden bag, there has been a lot of rent-seeking, dishonest behavior. So I had to deal with that. Secondly, at the bank itself, as I told you, there was already a lot of money in the economy. So we had to mop it up. We have to bring the money back, raise interest rates to bring the money back. Then we had to really remove remaining exchange controls, because that was the big problem. And the other problem, up until my arrival, the central bank would not bounce a government check. The government could draw as much money as they wanted from central bank, even if they had no money. That really compromised everything. So we had to bring in a law to say there has to be a limit. And that has helped a lot. That limiting that the government cannot draw any money. So as soon as we arrived, it was agreed that all the government can draw money if they have credit on their account. And what they have to do is go to the treasury, check that there is money in the account. All their checks didn't come to central bank direct. They had to go through treasury. And that has helped the nation. Big number one, total removal of exchange controls. Total removal. No one had to come to central bank for foreign exchange. That's one. Second, we improved significantly bank supervision. The bank supervision of central bank was increased. We brought discipline in the banking system, that anybody who was a director had to be vetted by the central bank. That it was a must. And as I told you already, one significant step, the fact that government would not overdraw central bank, it means they cannot create liquidity. It means the value of the currency cannot fall because somebody has printed money, like Zimbabwe. That is a very major development, so that you can bring in your foreign exchange. The third one, for me, when I arrived, there was virtually no foreign exchange. By the time I left, we had 3 months foreign exchange cover. People felt safe to bring their money back to Kenya. So that was significant. Yeah. They didn't have technical expertise to vet the borrowers. And they relied too much on parastatal deposits. And so the borrowings were not secured. So basically, it was a very bad culture. And we had to close them down. It was very painful. From the beginning, 1966, remember it was the East African Bank. Yeah. The bank was one. At 67, we had our own bank. And basically, central bank was a department of government, a department of treasury. Up until even when I came, you remember the exchange control days. The infamous exchange control, import licensing. The Minister for Finance used to approve all those import licenses. So there was very close relationships, but more or less to make money. The big boys, there was no lady at that moment. The big boys really made money by that close relationship. When the crisis struck in 1993, when I arrived, the donors insisted that there must be separation. That's the process when we began to stop the borrowing. That's the time when the governor's tenure was given very clearly. So it's been an evolution. But the government always felt they should have a hand in central bank. But because of that crisis, everyone has seen the wisdom of giving autonomy to central bank. The price of our currency, which is the exchange rate, will go up and down depending on the economy. That we must admit. If we are importing more than we are exporting, there will be shortage of foreign exchange. But central bank has to keep watching. If there is no fundamental change in the economy, they can allow gradual depreciation. But in the last one, the central bank's job actually, two major things. They're supposed to work on the price stability, very low inflation, and then banking stability. But I think the governor and the management went the other way around. They wanted to please the government. What did they want to do? To lower interest rates so the economy can grow. So they lowered interest rates on treasury bills as far as 2% when money supply was going up. So that one, they just went to sleep. As long as they manage money supply and as long as they work on the two, price stability and banking stability, the currency should move the way the economy is moving. And they should explain why it is happening. But if they are temporary, things like perhaps there have been huge surge of imports and central bank believes this is temporary, they can inject some foreign exchange. That's why they have got 4 months cover of foreign exchange. Their job is to sell into the market or to buy into the market to try and regularize the currency. Yes. So central bank has a role, but at times, like the last time, they went to sleep. And they quickly woke up and they tightened money supply. You saw it. Yeah, they quickly, and they shouldn't have happened. It was unfortunate. I think over the last 50 years, for sure, more people have begun to join the banking system. There are more Kenyans banking. And in the last 10 years, 15 years, let me just pick one for commentation. Equity Bank. If you remember Hillary 10 years ago, 12 years ago, the big banks, were closing branches in Kabarnet, in Eldoret, and overnight, Equity Bank comes, and they open branches. And quickly, the big banks say, my God, we are losing our shot. So, one major development has been banking has come and really, more people are now banked. There is a new development, mobile money, M-Pesa. We are seeing the tip of the iceberg. Banking will not be what we know. All these banking halls, you should not be thinking what to do with them. Because you may eventually find you can take your loan through mobile money. That is the new development. Banking now, if you know, there is what they call branchless banking. Before, if your branch was Lavington, you only went to Lavington to cash your check. Today, if you come from Bungoma, you can just cash your check in Bungoma. Today, on the mobile, the bank will actually notify me, my bank at least. If there's any movement on bank account, they'll notify me. But then there is the danger, which we're in that fraud. These youngsters are very bright. The banks have to be very vigilant against banking fraud. 20 years ago, Hillary, we didn't have ATM. You now go to an ATM, you withdraw your money. You go to an ATM, you bank your money. So sooner and sooner, you'll find that you don't need to go to a bank. Yes. But technology has brought more benefit than loss. So we are really going to see the banks become more competitive. The cost of banking must come down, and banking must go more to the people, more on the ground, and best still through the mobile. Yes. Banking industry must try and leverage on this ICT and try and lower their cost of doing business. Really, that's their biggest risk. But ICT is their best advantage. The second one, Hillary, the banks must realize for Kenya, we are going to devolve. For Kenya, we are going to put a lot of emphasis on agriculture, service interest, education, health. The banks have been financing basically trade, manufacturing. If you go to a bank and say, I want to do agriculture in Turkana, I want to do irrigation, no-go area. So we would like the banks to begin thinking that certainly there are going to be bankable proposals in rural Kenya when the county governments come on many fronts, on agriculture, on private health services, private hospitals, private schools. These are areas where banks are very averse. So look at the schools which have come up without banks supporting them. If they are to support them, they would be a better speed. So it's going to be, we go to our bankers who think outside the box.